The way is in training. Miyamoto Musashi. It is about dedication. It is about concentration. It is about taking the knowledge and applying it. If you want to learn what we do here, we ask you to, from the beginning, decide to devote 10 to 15 minutes a day, each and every day the market is open. Do all the practice trading you can. Listen to the programs. Take the trainings that are made available every day to subscribers. And you can subscribe for free at chartingwealth.com. And you will get this. If you're looking for a shortcut, a quick cheat, I can assure you there are no such things, but there are suckers out there who buy them every day only to get ripped off. We provide this to you as a gift. And the problem is, with gifts, people don't tend to appreciate them. We so much appreciate the people that support us. Those are the people who buy our book and our Patreon supporters. But we give all this out for free. Now, let's jump into these charts. What do we see going on? We see stocks when it comes to the S&P 500 and the Nasdaq 100 down, bonds and gold up, Bitcoin down. Let's first jump into the S&P 500. We see that it is down for the day. We have a weekly vertical crossover that is in effect. We will go ahead and do the official moving of the line, and we will do the reversal of the arrow. How many of you jumped into this as a practice trade today? You, of course, didn't have to. I hope you came up with a good reason for not doing it if you chose not to. I will agree with you. It is not a huge red down candle, but it is. You can see a big retraction on the down movement, but you have some nice down movement, very little up movement. We see a nice crossing that's occurring. Derivative oscillator's been losing momentum for, well, this is the third week. We go to the 2-day. It has already crossed over back on the 2-day candle ending the 14th of May. It is heading down, the price percent oscillator, derivative oscillator, losing a little bit of momentum. Of course, for the day, we have a green up candle. Now, you say, wait a minute, how can you have a green up candle when the chart itself was down for the day? Well, it's a Heiken Ashi candlestick. You don't know what that's about? Well, learn about it. You can find that at, well, our YouTube channel. We put that training out all the time. Again, the training we have out today at the end of this video, and I'll put the Heiken Ashi training at the end of this video too, just so you have it. I'm putting out a training for you on how to use the trade worksheet. Now, the special training I put out for you that is in the show notes goes to our subscribers. So we see that that's where we are on, this is the first day of the 2-day. Price is below the weekly trend line, above the 2-day trend line. It's only the first day of the 2-day. We'll see what happens on Monday, but all important price percent oscillators heading down. Derivative, when we look at the half-day chart, we can see up in the morning a bit of a pullback, in the afternoon, price percent oscillator heading up, derivative oscillator heading up. So you can come up with reasons why not to have gotten in to that crossover. It could be the green 2-day candle that's forming on the Heiken Ashi candlesticks. It could be the fact that the half-day chart is still heading up, but again, bumped off that weekly trend line. So most arguments on the short chart typically aren't going to hold a lot of water. Remember, we focus most on the weekly and then the 2-day. Let's go to the Qs. It was down also. Of course, we had that weekly vertical crossover. Back when? Well, that was back on the week ending the 7th of May. We had a down week. Didn't reach a lower low this week, but price was moving, the price was moving down overall on the Heiken Ashi candlesticks. The derivative oscillator flipped over negative this week, and the price percent oscillator is heading down. Price is below the weekly trend line. So again, as we look at things shaping up, moving in the right downward direction as predicted by our price percent oscillator on the weekly. What do we see on the 2-day? Likewise, we see first day of this latest 2-day candle popping up. Though it was down for the day, we do have a green up candle forming, and we see the price percent oscillator sliding sideways, maybe down a little bit. Derivative oscillator still negative. 2-day trend line has been penetrated, still below the weekly. We look at the half-day chart. It has been climbing for a while. We can see how when it bottomed out lastly, back on, let's see, the morning of the 19th, Wednesday, we saw in the afternoon sort of settle down, popped up Thursday morning, afternoon, and then Friday up and then down toward the end of the day. Price percent oscillator still up, derivative oscillator still up. So that's where we are on the cues. Again, I'm leaving it up to you, how you set your profit and loss bands. Again, great trainings on that available. Let's now move on to 20-year bonds. This is a funky chart, I will agree with you. When we look at the weekly, we had our weekly vertical crossover back on the week ending the 30th of April. That next week, we had an iffy week with a doji pretty much forming, and then the last 2 weeks, price going down. This last week, it didn't bottom as low as the prior week, but look at this doggone price percent oscillator. It went up a little bit. Derivative oscillator's been losing momentum, pretty much in parity over the week ending the 7th of May and the 14th of May. But we see now this last week, as things started losing momentum there, the price percent oscillator heading up a little bit. We look at price, we can see we penetrated our weekly trend line, but the price percent oscillator is still going up. Look at the 2-day chart. We see most recently we had things, looked like there was going to be a penetration going down, and it's trying to bounce off. Just crazy. So again, we'll watch and see where that goes. We look at the half day, and of course for the last 2 days, been going up quite nicely. So the overall mood, regardless of what we've seen as far as our indicators go, and in particular our price percent oscillator, which is our master indicator, it is a percentage version of the moving average convergence divergence indicator. It's showing us still some strength in 20-year bonds. So we'll watch, wait, and see. Nobody says you need to get into any trade, but this is one that we're just watching because it is rather bizarre what's happening. We'll see what we can learn from it. Now, let's lastly, before we touch on Bitcoin, let's lastly take a look at gold. Of course, gold had a weekly vertical crossover back on the 23rd of April. That next week was a little bit of a slowdown, a little scary moment there, and then gold, of course, boomed off again. And we see that price percent oscillator gaining energy, derivative oscillator heading up. Beautiful, beautiful. Now, again, didn't end up much on Friday, 0.05%, but throughout the course of the week, we saw lots of good gains in gold, things looking nice. We look at the 2-day, we can see it climbing also beautifully. It has just been gorgeous after that Tuesday, Wednesday, Thursday, Friday slump right after the weekly vertical crossover. So again, things looking nice in gold when it comes to our two main charts. What do we see when we get intraday? Well, we can see where gold peaked back on this last Wednesday, the 19th, and then sort of slid sideways, tried moving up, and lost a little bit at the end of the day on Friday. However, we see that gold is still, and let's go ahead and adjust Should have done this earlier. Let's go ahead and adjust our trend line for the half day. We can see that gold is still well above the 2-day and well above the weekly as it tries crossing over going down. So we'll keep an eye on things, see where that leads us. And still looking great on gold though. So let's leave gold and go to Bitcoin. What is going on with Bitcoin? Well, we've told you for several weeks after that weekly vertical crossover back on the 26th of March that Bitcoin was in some serious pullback issues. Now, those of you who said, what's that dude talking about? What does he know? Bitcoin's going up. And it did. It went up for 3 weeks with all those issues that it had as the price percent oscillator continued to gain downward momentum. That's called the danger zone right there, my friends, because then, of course, came the drop. And that drop happened the next week. Following week, had a little bit of a pickup, and then the next week, more down movement, and then this week, the drop. A high of $54,884, a low of $36,543. Ended the week at about $44,000. That's a big down week. It's the biggest red down candle that we see going back a year. So heavy down week. Price percent oscillator dropping over derivative oscillator. Let that be a lesson. When price continues to escalate and the price percent oscillator continues to pull away from the signal line, that's telling you a devolution of price and energy, and you have a drop coming. Don't know when, don't necessarily know why, but know it's on the way. And you're playing Russian roulette. Week 2, 3, 4, and then boom. Week 5, you take the hammer. But that's what you learn when you chart, when you practice. Now let's go to the 2-day. What do we see going on there? Well, we can see this latest 2-day not dropping as far as the prior, but down for the day. Let me see here what it was down 9+%. So again, no, it was up yesterday and then smashed over going down. Price percent oscillator, derivative oscillator heading down. Lastly, we look at the half day. You can see that up movement over the day on Thursday and then rolling over again on Friday. So that's where we are, my friends. I'm still recovering. I appreciate your patience. I wanted to get this out for you today. It was important. You have questions, problems, concerns, we always love to hear from you. Thank you for all the well wishes. I am getting better. Should be back 100% next week. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.